this is when the next group of billionaires 10 years from now they're going to look back and say, oh man, 2023, how did you make that incredible trade in 2023? And that's when a lot of the billionaires are made, or during times like right now.
Hey man, welcome back to the BetterWealth podcast.
Caleb, good to be here. It's been a long time. This is my second time in your show, Dylan. I love what you do. I love your show. I was just happy to come back on. This has been so awesome.
You are one of my favorite people to follow, by the way. Your content is incredible. You do such a great job talking about faith, family, funds, business, politics, and you do it in such a beautiful way. Usually people can't pull off one of those, and you pull them off all together in a really amazing way. So I want to talk about all things fund. You have an amazing event coming on. When we first did the podcast, you talked about funds, and it was amazing. And I heard so many people are like, I know there's certain people in your group right now because of that podcast, which makes me super, super happy. So I would love to talk about funds because you are the fun guy. But I would also love to talk about like what is going on in the world right now. We're like in a recession, or are we in a recession? It's kind of a weird time. And our message is like, be efficient, unlock intentional living, invest on yourself. And I see the fund as like a tool where someone who wants to provide value in the world can be a lever, but it also can be the path for you to what I call value leveraging. Create value and amplify that leverage, amplify that value to the world. And so I don't know where you want to begin, man, but I want this to be as valuable as possible for our audience, and funds. You are the fun guy.
Well, and I'll just say, Caleb, I've followed you for a while too. I love your content and stuff on taxes and everything. You're very sharp on how that all works out. So I just want to compliment you again. Yeah, we can start wherever though. You want to start funds?
Let's talk about funds, man. 2023, we had an amazing podcast that we'll link that talks about your story and all that stuff. So we'll save time, not get into all of that.
The other one,
2023, currently, how can someone get into the funds? And I'll let you take it over for here.
Yeah, I love it. So just be aware, I currently I'm a hedge fund manager. Currently, I manage a hedge fund. This is my third fund I've launched. And then during that time period, my dad actually is co-founder of a massive family of funds. They manage over 40 billion now. He's now since retired, but that's 10 times bigger than Cardone Capital, just to put it in perspective. My brother is also an investment funds attorney at the largest law firm in the world for funds. Then I have myself. I've launched 3 funds myself, and we can go list that whole story if you want. And in the last couple of years, we've helped people launch funds as well. So we have a company called Fund Launch. We launched 120 funds last year out of our group. So what's cool is, and sorry, I'm prefacing all this, I get this really cool lens. We have about 400 fund managers in our group, like our top group. And we hop on, like this morning, we did a call. Everyone hops on. We all talk about like, hey, what are you seeing? Like, what's going on? What's going on in the real estate market in South Florida? What's happening in the Forex markets with the euro and the dollar and all these exchanges? What's going on in the commodities markets? What's happening in the land market? And I personally get to hear from incredible fund managers that collectively manage billions and billions of dollars and are paid good money to manage money for other people. And it's really actually cool. So right now, the question was, in 2023, where are we at with funds? It's funny. I actually did a kind of a whole research on funds in recession. So on the weekends, like I go study fund managers because I'm a geek like that. I love studying fund managers. So you have these great fund managers of all time, like Ray Dalio, Warren Buffett. You got Ken Griffin. You got Jerome Kilberg, people like this that have run these massive, $100 billion funds. And it was funny enough, I started to date when did they launch their fund and how soon or before was a recession. And it was crazy enough, I started to do this research study, and almost all of them launched either at the beginning or middle or sometimes end of a recession, like in the heart of a recession. Warren Buffett, his first investment, he raised $105,000 when I believe he was 26 years old. This is the 1950s. 3 years later, they go into a recession. He called it his first big bet of all time. They bet $1 million on this windmill company in the middle of a recession. And it turned this huge spark. It was made a ton of money, and it kind of turned Warren Buffett into the person we know today. Ray Dalio, you would think, man, it'd be the beginning of a recession would be the worst time to launch a fund, right? Mm-hmm. Jim Rogers and George Soros. Actually, Jim Rogers is coming to speak at our event. He's co-founder with George Soros on the Quantum Fund. He's actually coming to speak, which would be so cool. They started at the beginning of a recession, and the whole market sold off, and it turned into one of the biggest, baddest funds of all time on Wall Street. So I was like, I wonder if there's correlation here. I looked up this research paper that was put out. They surveyed, it was 510 funds across, they were all debt funds across the board. And they looked at the vintage year of the fund and then average returns over the next 10 years. And crazy enough, funds that started in 2001 and also funds that started in 2007 and 2008 returned almost double of what their peer funds that started maybe 2004, 2014, or whatever year it was returned. Almost double. And you kind of look at that and it's like, well, obviously, right? You had a lot of money during a downturn, so your cost basis to get into some of these deals are a lot lower. The odds of success actually drastically go up during a recession if you run a fund. One of there was actually two asset classes we saw during 2008, 2009 that didn't really blip much. Number one was emerging markets. So emerging markets just didn't even blip with the whole recession. The second one was hedge funds. Hedge funds performed extremely well through 2008, 2009. And so obviously I'm the fund guy. I love funds. I run a fund. But it's interesting, a lot of people we talk to are scared about funds or investing or running a fund. And I'm like, people, now is the time to lean in. And again, every asset class is different. Every real estate, every opportunity is totally different. But just historically in general, this is when the next group of billionaires 10 years from now they're going to look back and say, oh man, 2023, how did you make that incredible trade in 2023? And that's when a lot of the billionaires are made during times like right now.
So you have amazing teaching, and so this comes directly from you. And I've actually used this in the past, but you have this concept of like, all right, you have a Lamborghini and it's valuable. And if someone would sell it to you for 50,000, maybe it's $1,000, like, and you didn't have the money, you could come up with the money, and there's underlying value in that Lamborghini. And so like you would not have a problem going and asking your neighbors, knocking on doors, getting that money to make that happen. And so that example is, okay, a fund is number one, you have to provide value. So it's like, whether it's whatever your expertise is, and make that so good, like find the amazing deal first. And then the fund is just the wrapper that allows you to get the money and be able to have upside. And I'm just making this could be wrong, but like, that's how and that really resonated with me, because I think a lot of times when we think of hedge fund managers and all these things, it's like, we think of this, like we almost divorce ourselves from like what's actually going on. But these are people that are just figuring out a way legally to get money to flow to them. They're doing something with that, hopefully providing value, i.e. why people are keeping their money with them. And then they're the ultimate leverage, because they're getting paid on ultimate leverage. Is that like a fund 101? Is there something I missed? It's like, because
it's so funny. Funds are not that complex. Like people you have these terms like private equity, hedge funds, venture capital. Most people don't even know what those terms even mean. They're all a fund is, all those funds, and we've helped launch hundreds of them now. All they are is a pool of money. Investors put money into that pool. And then fund managers like me and you can just pull from that pool of money and go buy assets. And whenever those assets make money, it just flows back to the pool and then gets split between the manager and the investor. This goes back to like the Middle Ages. It's like, hey, me and Caleb are going to start a blacksmith shop. Give us some money. We'll go open a blacksmith shop. And whenever it makes money, we'll just split the returns. Like, it's not that complex. So then what's the difference, right, between hedge funds, private equity? The only difference is the assets they purchase. So for example, a real estate fund, we mentioned that like Grant Cardone runs real estate funds. All it is a pool of money. You put money in and they go buy real estate. When the real estate makes money, it flows back and gets split between the manager and the investor. A private equity fund, same thing. It's a pool of money. Instead of buying real estate, they go and buy private equity. They buy private ownership of businesses. They'll go buy, we have guys in our group that like have a restaurant. They go buy up all their neighboring restaurants and they group them into one group. That's private equity. If people like buy car washes, there's people that do large private equity. There's a group on Wall Street called Sycamore Partners. They manage about $10 billion. You probably never heard of them. However, they own Staples, like the department store Staples. They own Nine West Shoes, Aeropostale, Kohl's department store. Last year, they were trying to buy Victoria's Secret. That's a private equity firm. A lot of the brands that you use today are actually owned by the same company. So it's the only difference. So venture capital is just investing into small startups. Debt, you just issue debt loans. That's all it is. I hate about finance is people make things so complex.
So complicated, yeah.
And it's so, you know this, you actually teach things so well, Caleb. You're so good at this. And things are so complex, they're really not, they just have confusing terms. The concepts are really easy though. And so anyways, I'll stop there, but that's kind of the basics of funds, yeah.
So would you recommend if someone is to learn how to make money yourself, like put your own money into something, and once you figure out value exchange, then the fund is the way to get a pool of money? Is that like, again, like I'm just trying to like I have heard from so many people that took our podcast and were like, that was an aha, because just like we teach, again, life insurance is not for when you die. It's like, again, a place where you can store and utilize your money. Like I see a fund is like literally a key, a ticket to be like, hey, you're super valuable. You don't have to wait 30 years to accumulate your money. Like go do it now. And the fund gives you the ability to do that. I'm a huge fan of this concept. And I don't know why more people aren't doing it that are entrepreneurial.
Yep. Yeah, it's just a way to compound growth. So for example, if you're a house flipper, we had a guy in our group, he flipped 4 houses a year, his own money. Flips houses, great. We set up a fund. Instead of flipping 4 houses, he flipped 72 houses the next year. Just allows you to grow and have leverage. Now, like for example, so we run a hedge fund right now at crypto. It's a crypto hedge fund. We do crypto. I personally am not that great at crypto. I'm not, but I am really good at running a fund and actually raising capital. And so I found partners that were really good at crypto. They're incredible. And we have this whole risk mitigated portfolio. It's actually a really awesome portfolio. It's done very well through this whole period. We've actually killed it. We beat Ethereum, NASDAQ, S&P 500, Dow, everybody. We beat all the indexes, which has been pretty cool. And I just found really good partners that I call them the expert investor. People that have, sit in their basement and trade options all day, or the guy that goes out and does real estate, but they have no clue oftentimes how to maybe raise a fund or raise capital. And so I can come in and help them with those things. And you can scale that way as well. So you don't need to be what I call the expert investor. You can be, you can be that person, but you can partner with people already that have that expertise, that have found a niche or found really good deals that are discounted as well, that you just need. If capital is your only problem to scale, a fund is really good for you. I always think of a fund as like a catalyst you bolt on to a really good existing business model. We have a friend that's over here. He goes and finds, like in a small town, there's always like that one diner or that one restaurant that's really good that everyone loves. So what he does, he goes and finds that one restaurant and he says, hey, let's try to duplicate this into 2 or 3 restaurants. They do 2 or 3 restaurants. Once it goes well, they go, okay, let's duplicate into 50 or 100 restaurants. And they just put capital and operations into this existing business and it scales like crazy. And the owners make tons of money. They make tons of money. It's awesome. So it's just a catalyst for growth is what it is.
So let's play devil's advocate. Some of my most flaky friends are entrepreneurs. There's a lot of promises that sometimes don't get met. And obviously I'm in the regulated world. And so it's like, I see how like serious some of these regulations are. Let's talk about that. And like, what are the horror stories? Because you could ideally be like, okay, this works perfectly. And it's like, it's one thing to lose your own money. It's another thing to like collect people's money, lose it. What are the, like, playing devil's advocate, what are some of the negative sides of funds and what are some of the biggest mistakes that people make when they like flip their first house and they're like, okay, I'm going to go do a fund and we're going to blow this thing up. But they're underlying, like they're not seeing all the pictures, and the fund actually poured gasoline on them because they put too much leverage when they weren't ready.
Yeah, it's a great question. So the first thing I'll say is the biggest mistake. A lot of people don't, well, not a lot, but some don't set up their documents correctly and they set up the process the right way. So we teach a lot of this, how to build the legal documents are like 200 pages each. You have 2 big documents, your LP and PPM, that govern your whole fund. And we teach, a lot of our channel and show, we teach the rules around the SEC, who you can raise money from. You have accredited investors, qualified clients, qualified purchasers, like doing the right things. Now, if you follow all those though, let's say you set up the right way and have good legal counsel, and it's not that crazy, just do it the right way, right? So that's the first pitfall, just do it the right way. Now, let's say you're running your fund and it just doesn't make money. Let's say it loses money. Well, those 200 pages of documents, half of those documents essentially say, you're an accredited investor, you're smart, you can lose all of your money. That's pretty much what they say. You can lose your money through this or X or Y or Z or whatever. And in reality, if you lost a ton of money in a fund and you close the fund out, there's probably going to be an investigation done by the limited partners investors to see if there's any fraud. But let's just say there's no fraud. You just say, guys, it was an investment. It just didn't make money. Tough, right? That's all that really happens. Actually, that's why you build a fund. That's why you do the structure that way, so that it's actually, that's how it's set up. Now, if they investigate though, and you commit fraud, that's a totally different story. Now, fraud is, and some people are like, man, it's just like magical. Like people, like they didn't even know they're committing fraud. In my opinion, people know they're committing fraud. You have your LP and PPM, your documents, they very specifically spell out what you're supposed to do. Like for example, my fund says I can buy cryptocurrencies. Even if I get the best real estate deal on planet Earth, I can't do it with my fund. I have laws and bylaws of how my fund is supposed to run and operate that I've signed and approved and read through. And so what I would, you ask pitfalls, I would tell somebody, do not get in the game of funds if you're not deeply honest. If you don't have a deep level of integrity in small matters in your personal finances with your personal business partners, don't do it with a fund because it'll just be compounded and you'll go to jail for a decade or two. You'll go to jail. So that's what happens. They put you in jail. And so if you can't manage $10,000 or $100,000, you probably should manage $10 million or $100 million, right? And so, but if you are a person that is deeply honest, that has integrity, that can follow rules and do things the right way, because this is what happens. I'm going to share a few examples. Your fund starts losing money. Some fund managers will say, you know what, we're going to lie or just fudge the numbers to our investors so that it doesn't look as bad, number one. Or number two, we're going to take the money and take riskier bets. We'll go to Vegas and gamble or whatever, in that example, we'll make the money back. And what happens is they double compound their losses and then they go to jail. The third example is a lot of people, I think, don't get into business thinking they're a fraud. But what happens is you're running a multi-million-dollar fund and mom gets sick. Your mom gets sick and she has cancer, and cancer treatment is $1 million overseas in some other country. And mom's going to die without this cancer treatment. And people go, well, I have a fund and maybe I'll just borrow money from my fund and I'll pay it back, but it's the ends justify the means. We're going to save mom. And they go and they take $1 million out of their fund. They go pay for cancer treatment and they commit, high degree of fraud and they get put in jail. And they were justified in their own brain a little bit, right? If you got to sit there and say, I'm not going to do that. And now if you set up your fund the right way with third-party admins and auditors, you can't even do that in the first place. But that's an example to get you thinking is, I don't think most people start out, they're like wanting to commit fraud. What happens is one of those scenarios happens and they go, well, maybe I should change things up. And there's a moment where they divide and they get into this dishonest territory. And that's kind of what happens. So if I was going to give someone advice, just set it up the right way, be an honest person, do what you say you're going to do. And even if you lose money, it's okay. That's why you set up a fund. Investing is risky inherently. And we hope not to lose money at all, but that's what I would say.
Well, appreciate you saying that. So in other words, losing money is not going to get you in trouble. Yeah, but it's like if you're fraudulent, if you're a bad person, if you're not going to tell the truth, don't do this. You're just going to accelerate your time in jail or something. So I appreciate that. What is the average return in your group? Because you guys have like a mastermind bolted on to all the tactics and everything you need to run and operate a fund.
To be honest, I don't know the average return. And a lot of funds every fund is different, by the way. It's a risk adjusted rate of return. So how much risk are you associating with this return?
Yeah.
That's the bigger measure. But I'm just saying, if people are asking in averages, a lot of real estate funds are averaging, 10 to 15% returns on average. Some are higher, some are like 25 or 30, but they have a higher level of risk. I would say the most funds are targeting an 18 to 22% per year return for like a 7 or 8 year fund. I just say that's an average target. I have no idea though across the board of what they're actually returning.
If people want to know the tactics of like, how do I actually set up a fund, like step A through Z, it's not necessarily going to make you a good fund manager, but like how to actually set it up. Where's the best way for them to do that?
Yeah. So I realized a couple years ago, no one teaches this, like no one. So we started making YouTube videos and content. So you can check out our channel, like Bridger Pennington. We have a free course on funds. We have free products and stuff like that. We go really in depth, like the structure and running and managing of funds and building it. So that's what we do. And to my knowledge, we're pretty much the only people on the internet that teach this, which is kind of crazy.
And your content's incredible, by the way. Like incredible.
Well,
it's very cinematic and also like you will learn more on YouTube than I mean, it's really incredible. Yeah. So that YouTube, but then you also, I believe, have a course as well.
We have a free course and we have a paid course as well. And we have like a top group where we'll set the fund up with you. We have lawyers that come in and pitch deck designers, build it all out. But we have a free course on funds. We have a YouTube channel. Like I run a fund. I make money running my fund. Like I do this because I want to democratize the world of funds. I want to help more people understand this game. We have big events. We're throwing Fund Launch Live in a few months. We have 2,500 people coming out. It's going to be just insane. And the goal is to teach people how to launch funds. And this has been the secrets of Wall Street for 30 years. Only Wall Street people know about this, or if you got to go to Princeton or Harvard or Wharton to learn this. And it's not that crazy. I didn't go to an Ivy League school. My dad didn't go to an Ivy League school. We're all just kind of these misfit toys, but we've learned this incredible vehicle of funds, and it's super lucrative, and it makes tons of money. It's awesome. I love it.
I love it, man. I want to ask you about AngelList. I think they changed their name recently. Is that a competitor, or is that just a way that people, if they learn about funds, is a way for them to have AngelList manage versus not? Like, I think there is some confusion there.
Yeah.
I've invested with some people that use that as a way that I believe they take just a slight fee to make sure that they run all managing stuff. So I'm sure you can tell me the pros and cons of using a company like that versus maybe doing it all yourself.
Yeah, AngelList, I don't see them as a competitor to us. AngelList, at least historically, in my understanding, you can go and put an offering on there, especially like an angel. Like if you're launching a company, you want to raise a seed round for like 500,000. You can do it through AngelList. They'll help set up like the simple documents they'll list you, but they also charge a fee. It's not like a flat fee. They charge, I think it's 25 basis points of your entire offering. And they charge it per year.
It's a percentage base. Yeah.
Percentage base of your entire offering, which can be pretty hefty. That's why AngelList is a multi-billion-dollar company, right? They take some good fees. If you're actually going to launch a full-out fund, I would personally, I wouldn't recommend going on AngelList. It's not a place to launch funds. It's a place to launch like a one-off. Hey, I have a new startup, a lemonade stand, and we're going to raise $500,000. Let's do it. That's a great spot. And we would rather have you go to AngelList. But if you want to do like a fund, like you're going to buy up, you're going to be acquiring assets across the country and doing a full out fund. That's what we specialize in, doing funds. We also help with syndications as well, but we specialize in doing investment funds.
I love it, man. I love it. I appreciate that answer. And so what kind of questions, like, do you have a framework of how, if someone's like incredibly talented, has a lot of irons in the fire, is an entrepreneur, invests on the side, like where do they begin? Like, do you have a framework of like, this is where you should focus? Do you see a lot of people running a fund on the side while they're continuing to do their thing? And like, how do you determine what to do? I'm not saying this to brag, but I could legitimately run a couple different funds, which is a problem, right? Because of lack of focus, like a person that can focus will beat the person that can't focus all day, every day. So what is your framework on how you decide? And obviously you're doing a lot, but I'm sure you have operators and you have other who's in your life to make sure that you're fulfilling on your promises.
Yeah, it's a good question. And every structure is going to be different, but I'll say this as regard to funds. When you take someone's money, it's a serious endeavor, right? It's a serious deal when you take someone else's hard-earned money and have them as an investor. And you want to make sure you're very attentive to that money. And you're attentive to that fund. So I tell people, at least if it's not you, someone else needs to be like fully on this business and watching it every day and really, running this fund. Cause you gotta, it's hard enough, running a fund. First off, it's hard enough being an entrepreneur. Secondly, it's even harder to run a fund and manage other people's money and make a return and try to beat the market is even harder, right? And so I tell people, you got to be attentive. You got to follow, and every fund is different. Some funds are algorithmic trading, and some funds are buying up deals. And so it's oftentimes it doesn't need to take 60 hours a week. It can take actually a minimal amount of time, but it needs to be you need to be attentive and on top of it. I know a lot of venture capitalists that they only spend 10 hours a week running their fund. But those 10 hours are very intentional. They're meeting with startups. They do pitch days on Friday. So every Friday, their full day is full, and maybe Tuesdays they work on other compliance stuff, and that's it. But they're very attentive on markets. They're watching the macro lens. They're very attentive, though, still to their fund. So I wouldn't equate like hours worked with returns, but I would just make sure they're very attentive to what's going on. You don't want to be negligent with, millions of dollars from other people.
And how would you pick what to focus on? Like, for instance, there's people that I know that are business owners, and what they could say is like, hey, I need more money for my own business. Can I create a fund and then fund my own business? Like, where's obviously like that potentially could be a red flag, but you might see people doing that. How do you determine?
Let me give you a cool example. You ready for this?
Okay. All right.
Yeah, it's actually just so cool. We've been seeing this with current business owners. So we had a guy call me up. He runs a gun store in the Western United States. And let's just, for argument's sake, let's just say it's a $10 million a year revenue gun store. Okay. $10 million a year. And he's like, I want to scale. I want to buy my competitors, but like, what should I do? Should I get a bank loan? I could get a loan. I could do the Shark Tank model and give up like 20% of my business, to Kevin O'Leary. But he's like, that's kind of risky. I don't know if we're going to do any, like, whatever, And I said, dude, don't do any of those. I said, do this. Start an outside fund. Okay. So you leave your existing business as is.
Yep.
You start an outside fund. Let's say you raise $20 million outside. It's independently run by, you're still going to run it as well. You have partners and stuff. That fund goes and acquires all of your competitors' stores. Let's say there's 10 of them. Okay. It goes and acquires for $2 million a piece, all these competitor stores. And you're pretty good at operating gun stores, right? So the fund is going to contract you, let's just call it like 5% corporate fee or something, to run the stores for them, the fund. And you can put your branding on them and all your supply chains, because you're a really good gun operator, right? You put all the branding on all these stores and ta-da, all of a sudden you now have control over 20 stores in your region. You have a monopoly on your region. And the returns of the competitor stores will still flow to the fund and get split, but you'll get paid on those as well because you're a manager there. And then you keep your existing business as is, and you kind of get the best of both worlds. And he was like, what? And I was like, he's like, you can do that? I'm like, yes. It's actually an awesome way to do it. People do this in real estate all the time and other businesses. Don't give up your current business. Just start an outside fund that buys up your competitors.
Bridger, I'm saying this out of like pure honor. Like, you remind me of Pace Morby from a standpoint of your ability to solve problems. I know you and Pace are friends, but that's what I love about this. And it's not like you weren't born with this. This is your ability to think outside the box, but like you're using funds just like he's using creative finance as a way to like solve a problem. And I just absolutely love that. And I think if there's anything that, if you're listening to this and you want to get to the next level, like I just would encourage you to follow Bridger, follow Pace, follow people that are thinking outside the box, that are actually solving people's problems, because I love it, man. And like, ever since we became friends, like I just start seeing things differently. And I can't tell you how many times that the fund has been an amazing solution. And I've been a part of some funds since, haven't run one yet. Maybe maybe that needs to happen next time we talk. Maybe that's the thing that needs to happen. But I've been able to use leverage because I've been betting on other people. And I'm just incredibly thankful for how you communicate and how you talk, because this message, you're really right. This is been Wall Street's secret for so long. And it's interesting. You're really threatening because of how fast you're growing, and you're telling the little guy like this doesn't have to be this way.
Yeah. Well, thank you so much. We got Pace coming to speak at our event now, by the way. He's one of our speakers, which is so cool. I love Pace. He's an awesome guy.
I think that's incredible. And again, I will link all the things from a standpoint of your YouTube, your free course, your paid course, and then your program. And I would highly suggest, like, guys, if you're interested, like, please, like, we could go into all the details about how funds work and like how you can actually, as a general managing partner, get paid more, and like all that stuff is cool. And if there's any talking points, you can mention that. But you have videos that break all those down that do a way better job than what you can explain on a podcast here. So any talking points there before we transition to macroeconomics and some other things that you're seeing?
No, yeah, thank you, Caleb. Yeah, we got tons of good stuff online. I eat, sleep, and drink this like all day. So that's what we do. It's pretty fun.
So overall, 2023, we have a recession, which you mentioned that like a lot of good things can happen out of this. It's kind of a weird time when we're raising interest rates. We're not really seeing the layoffs quite yet, and like what's going to happen there. It's very interesting. Everything's politicized. What do you see right now, like from an investor standpoint? And you kind of have an inside scoop because you get to so many amazing people that you get to kind of see what they're doing. What are some of your predictions, and what are some of the principles that you're like going back to with where we are currently right now?
Okay, this is a fun topic. I take everything I'm going to say with a grain of salt because I'm an idiot probably and I don't know anything, but this is the stuff that I watch. I'll just kind of tell you and I'll tell you a bunch of historical stuff, and then that kind of leads into what I think might happen here in the next couple years, but we'll see. I'll start with this. The 3 rules of investing are: don't fight the Fed, don't fight the Fed, don't fight the Fed. Okay? The Fed is the biggest, baddest organization on planet Earth. They are run by the 12 largest banks. It's a private organization, by the way. They control the world's money supply. Now, people, I know the Fed comes out and I'll say this scandally. People, and I myself included, we criticize Jerome Powell and Biden. They're such idiots. They don't know what they're doing, blah, blah, blah. They may say dumb stuff, but you got to watch what they're doing. They're playing a very interesting game right now. For example, I'm sure you've taken economics courses and studied economics. In economics, what happens when you have inflation? The value of the currency should do what? It should go down, right? Like That's the definition of inflation, means that you're devaluing a currency. Well, guess what's happened the last 2 years? The US dollar is at 20-year highs. How does that happen? How does that even make sense? You have super high inflation and the currency goes up. And you look at the US dollar index, I pulled it this morning, compared to UN, euros, bitcoins, oil, orange juice, the US dollar has gone up in value. How is that possible, right? They are defying gravity right now. So let me just give a few examples. So last year, this is March of 2022, Saudi Arabia considers trading oil with China using UN, not using the US dollar, okay? Now, I'm going to take you back a little bit to the petrodollar. In 1946, we had the Bretton Woods Agreement. After the World War II, all the nations were decimated. The United States comes and says essentially, hey, everyone's killed. You know what? We won the war. We don't want land. We don't want any of your territories or anything. All we want to do is we want to just trade with you. And guess what? We'll pay for a navy. A navy is one of the most expensive things a government can have, is a navy. We'll pay for a navy. We'll police the entire world as long as you trade with us. And everyone's like, this is the best agreement on planet Earth. Where do we sign up? And everybody gets in line to sign up like this. And they go, oh yeah, one stipulation, you have to use the US dollar to trade. That's it. And we'll do everything. And ta-da, everyone lines up and signs the agreement. And since then, the US dollar becomes the world reserve currency. 96% of global trade happens in the US dollar. If you're in Germany and you buy oil from Saudi Arabia, guess what happens? You can't use euros or German marks or whatever. You have to use US dollars. This is called the petrodollar. It's known around the world. So Ray Dalio comes out with a book and a bunch of the people talking about world reserve currencies that come to an end, all that kind of stuff. So last year, we have Saudi Arabia getting bid by China, and they're considering using UN to trade with US dollars. And guess what happens? Okay. First thing we do is we crank up interest rates and limit money supply. Okay. July, President Biden actually hops on a plane and flies to Saudi Arabia. Now, we don't know what the conversation happened, but I would assume it was something like this. Hey, Mr. Saudi Arabia, how can I justify housing 5,000 troops on your shores? Oh, and also we pay for an aircraft carrier to be parked outside your country to protect all your shipping lanes, to protect you from Iran. Iran actually did a full drone attack on them like 2 years ago. How can I justify to Congress to pay for this when you're not going to use US dollars? Who else is going to protect you? I'm going to have to pull away all my troops and all my protection from Saudi Arabia, and who's going to protect you if you're not going to use US dollars? I would assume the conversation would go something like this, right? Now, Xi Jinping
that was
also
way more eloquently than I assumed the conversation went, but yeah, to continue, yeah.
But the result is Saudi Arabia continues to use US dollars, right?
Yep.
Now, same time period, we have, I'll take you back. Almost all major wars since World War II has been fought over oil and money. I know of 3 people in the history of the world that have traded oil not using US dollars. Muammar Gaddafi of Libya, Saddam Hussein of Iraq. Both those dudes kind of got killed by the CIA. The US government kind of killed those people. They traded large amounts of oil out without using US dollars. The third person is Vladimir Putin. And what's happening right now? The United States has kind of baited Russia into a war with NATO. We are fueling a war. We're giving them drones and tanks and whatever they need. We are fueling a war. Oh, and also, so we have this meeting with Saudi Arabia. This is last August. Russia's largest pipeline blows up, Nord Stream pipeline. And everyone blames Russia blew up their pipeline. Why in the world would Russia blow up their own pipeline? It's a $2 billion pipeline that makes Poland and Germany dependent on Russia. Why would you do that? Russia wouldn't do that. There's actually a Nobel Peace Prize-winning journalist that came out last month that said the United States did it. They were doing operations you needed a submarine to go and plant the explosive underwater. How many countries have submarines, first off? And how many were doing operations? It's like the United States did it, you know? And ta-da, all of a sudden, Europe is almost 100% dependent on United States liquefied natural gas. Ta-da, right? Pretty interesting. President Biden takes office. What is the first thing he does? He cancels the Keystone Pipeline. Remember that?
Yep.
And I was like, why is he doing this? We had the cheapest gas on earth. Like President Trump, it was like $1.50 a gallon. He cancels it, and we are now buying oil from Saudi Arabia. We were energy independent. Why would he do that? We need Saudi Arabia to use US dollars. We need The greatest export of all time is US dollars. People say like, oh, whatever, like the greatest product ever created is US dollars. They create 1 trillion of them. And people like us work 80 hours a week. We fly around, we do crazy stuff to get more dollars. And then they print another 1 trillion of them. And we work like crazy. We fly around to get another dollar. They print another 1 trillion. They keep doing it over and over again. And you have to make sure the world is having velocity of money using your dollar. People always get mad about the national debt. Oh man, the national debt's so high, the debt ceiling, blah, blah, blah. What does that mean? It means other people have debts denominated back to the United States in US dollars. They're not done in Bitcoins. It's not debt in oil, barrels of oil. It's not debt in UN. It's debt in US dollars. So for example, if China wanted to use a different currency, let's just say, for example, they owe the United States, we owe them $1 trillion, US dollars. Well, if they devalue our currency, they're going to have to take a loss on $1 trillion. So what you would do if you were the world reserve currency, you would flood the world with cheap debt denominated in US dollars. You would make sure the entire world uses your dollars. Oh, and by the way, sorry, I'm going on and on, but please just bear with me. The United States, we have 11 aircraft carriers, super carriers. They are massive. They have two nuclear plants inside of them. They can like leave port for like 100 years and never port. I mean, they're insane. By the way, for an aircraft carrier to leave port, it goes with like 15 other ships. They have a submarine, they have tankers, battleships, they have crazy stuff that goes with them when they leave port. We have 11 aircraft carrier groups, 2 more are coming online in the next couple of years. If you took a look at the deck size, the combined world has half of the deck size of aircraft carriers that we have. Again, a navy is a luxury for a country. Almost most countries in the whole world don't even have a navy, let alone a few little ships. We have 11, almost 13 super aircraft carriers. Other countries that have aircraft carriers, they're World War II era. They're almost like a third the size of ours, okay? We can project power anywhere. So if you look so again, back to our timeline here, we had last March, Saudi Arabia and with oil. We then raise rates. We tighten our currency. We then blow up a pipeline. China says they want to take Taiwan last year, right? So what do? We park an aircraft carrier in the region, and they're still doing crazy stuff. We then parked a second aircraft carrier near Taiwan, and China's still running planes and stuff. We then parked a third aircraft carrier in the region. And guess what happened? Everything kind of just settled down. It's like, we don't want to do this right now. And at the same time, the United States drops a CHIPS Act, $54 billion. They are building now, my business partner Dan's on the board of Intel. He's been on the board of Intel for 16 years. Intel is building a 1,000-acre site in Ohio. We're building a huge site in Phoenix and a bunch around the country. We have another $280 billion that's going to be hopefully unlocked this year for them to build more data centers around the country. Sorry, I'm throwing a ton of information at you, but it's kind of cool. So you have all this happening. And what has happened since then? The US dollar has gone up in value. And I think what they're saying is, really, Saudi Arabia, if you want to use yuan, if you would have used yuan, it would have been 10% less valuable than it is 6 months ago. Yeah, really, you want to get away from the US dollar? Okay, go ahead. Use something else and we'll just see what happens. So you fast forward to right now, and we've had a 12-week digital dollar test. We've now had a handful of banks blow up, right? Mm-hmm. And we can talk more. Sorry, I'll kind of pause there, but I'll share my predictions now, I guess, of what I think these are coming. Is that helpful? Caleb,
yeah, no, totally. No, I really appreciate this, man. Like, that was epic. So continue with the predictions, and I got some follow-up questions for you.
Okay. So a few things. Okay, this is what I don't know. Again, I could be totally wrong. United States right now, the Fed, don't fight the Fed, don't fight the Fed, don't fight the Fed. They are playing this game of world reserve currency. Now, this morning it came out that France has done their first deal with China, and they bought liquefied natural gas not using US dollars. France, a G7 nation, a NATO ally, not using US dollars. Now, we'll see the US response. I believe there will be a heavy response for that transaction. I mean, I think there's two kind of options of things that might come forth, and two predictions I have, okay? Number one, this is my first prediction. I could be totally wrong, but first prediction is this. Let me take you back a little bit. Sorry, I'm gonna give you a little backstory again. 2022, it comes out, JP Morgan Chase has been manipulating the price of gold for the last 10 years. Did you see that when that came out?
I did not, no.
It was the largest fine in SEC history, $920 million fine. They were manipulating the price of gold. Gold is about a $12 trillion market, okay? So they manipulated the price of gold, and they come out, they do this big fine, and they were using a futures market, and they're using trading volume to spoof the market, and they're manipulating the price of gold, a private company, okay? Now, right now, there's all these people online that are saying Bitcoin should be $1 million a coin. Gold is going to take off. Silver is going to take. You have all these people that are saying this because the U.S. treasuries are dead, blah, blah, blah. U.S. is dead. Okay, I agree with you. According to math, gold should be like $5,000 an ounce. It's like $1,600, $1,800 right now. It should be $5,000. Like, it should be. However, we're not playing normal math. We are in a time where we have high inflation and a currency is going up in value.
Yeah, which is insane.
It's weird. The things that you thought would make sense. We had $13 trillion at zero or negative interest rates in 2019. Negative. I don't know. There's no economics book I've ever read on negative interest rates. They are defying gravity. And I just asked people the question, is it possible? I'm not saying it's happening, but is it possible the United States does this whole investigation, learns how JP Morgan does this, and is still manipulating the price of gold and silver to keep it artificially low? It should be, I believe it should be $5,000 an ounce. It's not. It's been about flat for about a decade.
Yeah, because if you think about it, Bitcoin is extremely threatening as well to...
Yep.
Yeah, so that's very, very interesting. So in other words...
Bitcoin, let me just add one more thing. Yeah. 2 months after this comes out, they had 2 ETFs planned for Bitcoin, the Grayscale ETF and the Futures ETF. They approved one, they didn't approve the other. They approved the futures market. They did not approve the spot buying ETF. Why would you do that? Well, you need a futures market to spoof a currency.
Yeah.
Sorry, I cut you off, but is it possible the United States is spoofing and they're not going to kill an asset, but they're going to keep it in a box, right? Is it possible? Pretty interesting. So you have that play. You have potentially the biggest, baddest organization on planet Earth potentially spoofing markets.
Yeah.
Gold, silver, crypto, UN, euros, and making the US dollar the biggest, baddest currency of all time, right? That's number one. So I personally, I'm like, I think they are going to go to the mat. And I think the out, what's the exit play? What's the off ramp? I think it off ramps onto them resetting their currency into a central bank digital currency.
So I think you believe that?
I think it's very, so option number one, my predictions, I have two predictions. Number one is that they will move on to a central bank digital currency. The New York Fed just finished a 12-week test of a digital dollar. They did it with Citigroup and Wells Fargo and MasterCard. They just finished it. It started in November. It was the same week FTX blew up. No one heard about it. You can go Google it right now. The New York Fed did a 12-week digital dollar test. It just finished. The 3 banks that just collapsed. Signature, Silicon Valley Bank, and Silvergate. The 3 largest crypto banks on earth. They do like 90% of all crypto in the United States are run through these 3 banks. It's interesting that those all 3 collapsed in a week. And they stepped in really quickly to take over those banks. Like it was like the next day. They didn't even let them like have a weekend. It was just like, nope, we're taking you over. Pretty interesting, right? President Biden a year ago put out an executive order on central bank digital currencies. So again, crazy. I could be totally wrong, but crazy prediction number one is we have a central bank digital currency coming out, and they're going to reset their currency backed by gold and backed by sovereign debt and other things. Okay, but I don't know. Could happen, could not.
So let me touch on that. Is the biggest threat then is if we lose the reserve currency of the world, and you don't see that happening, but you see that could happen if we don't do anything, like with what just happened with France and whatnot, or because it's amazing, and thank you for the amazing rant. I appreciate it so much. We're gonna for sure clip that for sure. What is the prediction? Like, is it okay? The reserve currency, I got that, but it's like if not. Is anything threatening right now the US dollar to be the main currency?
So yeah, that takes me to number 2. This is kind of like 2 options here.
Okay.
Number 2 is, that's a great question. What else? Like, where do you go? If you're not going to use the US dollar, then are you going to use Chinese yuan? Do we really want to use Russia and China's communist countries, their currency? Probably not, right? Do we want to use euros? Well, euros has been super unstable. Probably not. Do we want to use Bitcoins and Ethereums? Maybe. I don't know. But again, you got to think, these are the most powerful people on planet Earth. They have nukes, they have aircraft carriers, they have armies, they have navies. Do you really think they're just going to say, yeah, you know what, somebody else, you can have the world reserve currency status, no big deal, right? These are the most powerful people on Earth, and if that happens, by the way, it upheaves everything. I do not want the world reserve currency to change personally. People always talk about, let's make a change. It upends everything. If you own real estate, if you have a job, if you have a business, if you use YouTube or whatever business, that all gets upheaved and turned over if a world reserve currency changes. So I don't want it to happen, number one. Number two, I believe the United States government would rather go to World War III than have a disruption of world reserve currency status. Now, they wouldn't start a war. They would bait people into wars. They would put embargoes, trade embargoes on countries. They would put aircraft carriers out front. And you've seen this, like Turkey. They had a thing with trade with Turkey 2 years ago. They just parked an aircraft carrier outside of Turkey and said, you can't trade with Turkey anymore. It's the middle of COVID. And guess what? A month later, Turkey said, yeah, you know what? We're going to keep using the US dollar. We would rather go to World War III than give up world reserve currency status. So my two options, they reset the currency in a central bank digital currency, or option number two, they literally go to a world war or trade embargoes, or essentially a trade war with the entire world before we let go of world reserve currency status.
And is that, I mean, people can call this conspiracy, but like if you look at COVID and you look at what Russia and Ukraine right now, is that like the undertones? Like now, because I mean, dude, this is a total red pill moment. I love this, but it's like knowing this, you see COVID and you see Russia and Ukraine a little bit differently. Like we have the conservative talking point is, oh, we shouldn't be bailing out Ukraine and all that stuff. But it's like, is it possible that this is a way to like shut down Russia and for us to politically correct go to war without being like, hey, we're actually going to go to war over the fear of losing the reserve currency?
It very well could be. They have had many. I don't know about COVID, but with Ukraine, we've had 1,000 chances to, I think, not easily, but negotiate peace terms with Russia.
Yeah.
And de-escalate this war. And all we've done is escalate the war. Yeah. We've given more drones, more ammunition, Abrams, M1 tanks. All we want to do. So I'm sitting here thinking, well, the United States doesn't want peace. So they want to escalate. Why do they want to escalate? Maybe it's because of oil and world reserve currency status. It very well could be when you have Russia and China. And then what do you do as well? You put a trade embargo on China. You starve China out. China needs us way more than we need them. China imports 80% of their calories. They import about 75% of their oil. And so if we went to war with China, all you would do is park 2 aircraft carriers below India, and they get 80% of their 75% of their oil through Saudi Arabia. All their trucks would stop running in about 90 days. And they know this. That's why 2 weeks ago, Xi Jinping flew to Russia and said, we want to set up a pipeline to get oil another way because we are very vulnerable. Right? So I don't know. Again, I don't know. I'm just trying to play like, where's the world moving? And how can I position myself in that, in that movement?
How would a reserve currency reset, like, where, I mean, that's unprecedented. So it's, I guess maybe not with the gold, but like, how would that actually work? All of our money's worthless and we just start over? Or do you trade in your US dollars for?
So they did this in 1935, a little bit, not fully, but they said gold bullion was outlawed.
Yeah.
They said you got to turn in you have like a year, you got to turn in your gold bars for dollar pieces of paper. I think they would do a similar thing. So they would say, potentially, we have a new US dollar and a coin that we have on a central bank digital currency. You have a 1 year, 18 months to turn in all your dollar bills, and we'll convert it to a wallet. And it'll be all of our money's digital anyways. All of our money's all digital already. It wouldn't be that big of a change. They would just say, hey, it's bad. This is a new system or new order backed by gold and sovereign debt and the assets of the United States of America. And I could see them doing something like that to reset their currency.
And to be clear, are you in favor of this, or are you not choosing sides? You're just saying this could be a potential.
I don't even know what I'm in favor for.
Okay.
I'm not in favor of a new other currency. Yeah. I'm in favor of the current system. Okay. But a central bank digital currency, there's so many pros, but also tons of cons.
Yeah.
And I'm not
censorship. Censorship and like government shutting you down is a talking point for sure.
It's a huge talking point.
Yeah.
At the same time, it's a tidal wave that's happening. And you can either put your hands up and try to fight it, or you can get a boogie board and just go with the wave.
Yeah.
And so I try to be agnostic against it. I'm just gonna say, where am I gonna place my bets? And where am I? And I run a crypto hedge fund right now. Just so everyone's clear, I run a crypto hedge fund.
Yeah.
And I'm long crypto. I like crypto a lot. I'm long the US dollar. I'm long US equities. I'm long the United States economy just in general, because I have assets here. I live here. I have a house here. You know what I mean? I'm long. So I don't want the United States to turn over as a country. And I'm just looking for potential off ramps of what they might do, and those are kind of my predictions.
And you're optimistically looking at this, and that's what I love about you. Are you friends with Jason Hartman?
I love Jason. He spoke at our last two events. He's awesome.
Okay, I feel like I love this. It's like I love you because I've interviewed him, and he for the first time got me to think very differently about the U.S. debt and looking at the dollar and the value of dollar over time. And I just think it's incredible. Bridger, thank you, my man. This has been epic. I'm incredibly grateful for who you are. I always say this because I'm not nearly as smart as you on all this stuff. I just say this: I'm a simple person. Be valuable. Value creation is one of the greatest hedges against uncertainty, because whether we have a digital currency, the US dollar, God forbid the yen, whatever, seashells, roses, it's going to flow to value, perception of value. It's either a service or a product that can be created. And regardless if you're trying to be valuable with your time or you're creating a fund or a business, be valuable. And that is, if you're ever feeling anxious, and especially things that you can't control, always go back to how can I provide value to your employer, to the market through a fund, because that is going to be the ultimate hedge for uncertainty. And that's what I love so much about you, man, is because you're preaching that, you're studying that, but you're giving people tools to really make a difference. Any final words? And I'm going to have all your stuff down below, but any final words on this epic podcast? And again, thank you so much for
Caleb, I would just say you're a stud, dude. I love being on your show. I'll just say this is back to what you said, just provide value, be market agnostic. Do you provide good value? And it's funny. I get to talk to a lot of fund managers. You would not believe the level of optimism in their eyes when you talk to them right now. They are so excited about what's going on. It's crazy. And so I try to say, you know what, if they're excited, I should be excited too about all this stuff. And, and maybe I can make, and I don't control the world. I'm just a guy sitting in my office trying to put pieces together. But, and I probably am totally wrong, but I'm saying, where is money shifting and moving to, and how can I get ahead of that? And I'm going to at least change maybe I can't change the world, but I'm going to change my world. I'm going to change my family's life. And I'm going to be one who positions very well in a time like this. And Caleb, I just love and respect what you do, man. People, I love your podcast, your show. I'm just grateful to come on today. It's just amazing. So thank you so much for having me.
Yeah, thank you, man.